Micron Technology are under pressure despite reporting its quarterly sales nearly tripled as demand for its product outpaced supply. Let's find out why the stock is selling. Joining us now is Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Good morning. It's good to have you join us.
Yeah, good morning, Lindsay. Thanks so much for having me.
Let's talk about the reason why Micron might be under pressure this morning, shares of Micron.
Yeah, I mean, this was a really great report, and we've seen great reports in other AI-driven stories, recently. And so I think this is largely profit taking that's coming off the table. I mean, obviously we understand the environment that we're in. There's a lot of volatility out there. There's a lot of uncertainty out there, and you've got a company here that's up over 350% or so, or over the last year, or 325%, as you're pointing out here. So I mean, I think this is a lot of profit taking, but we still really like Micron. I don't think that the story is anywhere close to being over for this company yet. We've got at least a couple years worth of catch up in supply related to memory, and as long as we're not wrong on what AI is the build out's gonna do over the next few years, I think Micron is gonna do very, very well. So I think that ultimately what you're looking at here is potentially a buying opportunity. It's not that the company's cheap per se, but the growth story is certainly there, and there's a lot of wind still in their sails.
It seems to be, Micron talking about high spending in the next couple of years. Is this just some concerns as well from investors in terms of all this excessive spending we're seeing from these big companies?
Oh, certainly. I mean, I think the story is really turning into what's going to be the ROI on this big spend that's going on, right? And we were seeing companies spending hundreds of billions of dollars on new build outs and so on. And so, yeah, I think naturally the story has to shift to that. Now, I think this is overblown in the case of Micron in particular, because I mean, frankly, there's only a few players in this game as it relates to memory, and there's a long way to go before they're actually able to meet up with demand. And so I think the story is long. I think the spend out is warranted, and I think that that Micron's going to do very well in it. But I do think you're touching on a broader story that we do need to start looking at the spend here on a lot of companies and wondering, is the ROI going to be there?
Yeah, it's an interesting conversation as well in terms of people's patience, in terms of seeing that ROI. I know you have some stock picks. I do want to get to those, but first, just kind of looking at the broader market, it's been interesting to say the least over the last couple of weeks or months. You say you think markets can move higher from here, but not in a straight line. So what do you mean by that?
Yeah, absolutely. I mean, I think to say it's been different in the last little while is an understatement, obviously, with what's going on. And so, what we expect here is lots of volatility, and that's exactly what we're seeing. We're seeing lots of ups and downs. I think we're going to be a bit range bound at some point here pretty soon, until we get a little bit more certainty about what's going on. But I think that the markets, there's a lot to like about these markets too, and I think that despite the atrocities going on, what you need to look at is the buying opportunities that are being created here. So focusing on fundamentals, there are some great companies that were frankly just overpriced and were really difficult to get into not too long ago, and we might be seeing a buying opportunity here because the fundamentals behind them were strong before. We just didn't have good pricing, and so I think this is going to create an opportunity. But you got to be very aware that the next few months are likely going to be quite volatile, and so being willing to take the lumps is probably going to be necessary in order to do well in this.
Okay, so let's go through some of your picks. Strathcona Resources, what is it that makes this stock interesting to you?
Well, I think they're like primed in the story here. I mean, I think that one, they're a great producer. We love our Canadian producers, and I think that they're really well positioned here to do well. Obviously, with oil prices higher, they should do quite well in that. And what they've been able to demonstrate though beyond that is that they're great managers. They're great. They've been really able to manage their costs. One of the things that we like, I think the understated story here is also the share buybacks. I think were recently announced. And so, if you look at their dividend yield, if you add their share buyback yield, I mean, I think you're looking at about an 8% yield as per shareholder around there. So just to hang on to this thing, you're getting about 8% yield overall. So long story short is I think the story is really strong. I think they've been great allocators, and you're getting a really nice yield. They kind of wait for it.
Also, CNX Resources, another one that you like. Why do you like this company?
Yeah, CNX is a great story as well because, I mean, again, they're really playing into the story of like energy here, obviously with the natural gas producer. But what makes CNX really unique is their ability for cost control because they own part of the pipeline. They own the midstream part, and so they're really able to manage their costs better than a lot of their competitors will, and also their direct access to market. And so long story short on the CNX is that they're just way better positioned than most other energy producers to manage their costs. So when natural gas prices are kind of normalized, they do well. When natural gas prices rise, they do really, really well. And so they, yeah, I mean, it's just a really great producer that, again, I'd hold it up against any of their competition just because of that cost control.
And Constellation Software, another company that's been on the rise a little bit as of late. What is it they like about Constellation Software?
Well, I think that the SaaS like being blown up story is overblown. That's the thing. I mean, I think that what we're starting to see in the AI story now is that you need the rubber to hit the road. And I think Constellation is a company that's going to have the rubber hit the road really fast. And largely that's because of their ability to integrate AI into a lot of their systems or a lot of their software systems that are already out in the marketplace. So I think they're going to do really well in that. But this stock's been beaten up, as we can see, over the last little while. Over the last year because everybody thought that software was dead for a while. And I just think that's not the case at all. I think that if anything, AI is going to be used to enhance their offering and what they bring to the table. And Constellation has demonstrated for decades that they have the ability to manage through storms and they have the ability to acquire great companies. And I expect that's going to continue on. They didn't become bad managers overnight. So I think that's going to continue on. And in fact, I think AI is going to enhance the story. They're going to get they're going to be able to reduce their costs, improve their margins on their existing product line. And they're going to do very, very well.
And lastly, Thryv Holdings, shares are climbing today and you have a buy on this stock. So what does he like about Thryv Holdings?
Well, Thryv's kind of the same story, actually, as Constellation. I mean, this is, for a lot of people that don't know this is like a legacy Yellow Pages business. But what they've been doing over the last, well, we'll say little while, but over quite some time now is converting Yellow Pages customers into software customers using, and then what they're targeting is, this is not competition to companies like Salesforce or Microsoft. They're targeting like small and mid-cap type companies that really can't afford the services that like a Salesforce would provide. So they're in a really great market space, and they're converting over to like CRM systems and software systems that will help them to improve their business and data mining. And again, the company largely been beat up, I believe, because of everybody thought software is dead. But I think that Thryv's going to do a really good job of integrating AI solutions into their technology. And so I think they're far from dead. I actually think the story is just starting, and they're actually going to be really improved in the coming years. So I think this is one to watch out for.
Yeah, especially as you say, that software story is so interesting. Okay, that's all the time we have. Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Thanks so much for your time. Appreciate it.